USD risk ahead. Guys, two key risk events coming up for the dollar. First up at 1:30 London time, 8:30 Eastern time, US GDP data for Q1. How did the US economy fare in the first quarter of 2020? Most think not good, -4% at a quarter-on-quarter rate. So they expect a shrinking in the US economy. Why? Coronavirus. The whole US economy went into lockdown pretty much in March. Obviously, the US economy only went into lockdown in March. So January and February were quite good. So that means that Q2 is probably going to be much, much worse because the US economy has been in lockdown for the whole of April. It's probably going to be in lockdown for a lot of May, and it's only going to be gradually reopening by that point and into June. So Q2 is going to be the really, really bad one that we're going to be really excited for in 3 months' time. But Q1, it's going to tell us how was the initial stages. What's next? We have the FOMC meeting. Now guys, this meeting not going to be as exciting as some FOMC meetings in the past have been, because basically amid this crisis, the Fed has really decided that meetings don't matter, because when this crisis was moving really, really quickly, back in February, back in March, and even in April, the Fed wasn't waiting for meetings to announce new policy changes. They axed their rates 150 basis points in emergency meetings. They did their QE in emergency meetings. They did all their lending programs. They did their additional liquidity measures. All of this was happening outside of meetings. So this meeting, markets see it as one where the Fed kind of evaluates the performance of its policies over the last 2 months, as opposed to making more changes. So the Fed is going to be thinking at the moment, how are our lending programs doing? Because they're lending directly to the real economy at the moment. How are our liquidity programs doing? They have been trying to flood the market with dollars. And that is what the focus of the meeting is going to be. There are a couple of thoughts about maybe giving slightly more detailed forward guidance about how they're going to exit from rates being at zero eventually over the coming years. And there's also some talk about maybe doing something called yield curve control, which is where you set a target for the yield of US government debt, maybe for the 3-year government debt bond, or maybe the 5-year. Basically set a target. They might set a target of 0%, which means they'll buy bonds as much as is needed to get the yield to that level. Basically, it's a form of like targeted QE. The Bank of Japan have been doing it for years, but most not expecting it to happen in this meeting. But guys, listen, thing is, dollar could be volatile on these events. If this GDP data becomes out worse, we could see a bit of dollar strength because it's seen as a safe haven. But equally, if the Fed do deliver a bit of a dovish surprise, we could see a bit of dollar weakness. Because remember, when a central bank is more dovish, that puts the currency under pressure. But guys, either way, it's going to be an exciting day. We're going to be all over it for our members, so do check our memberships out. That is pretty much it from me for now, and I will see you in the next one.